Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, let's keep up on analysis of the gold market. So market has actually shown the bearish performance that we have discussed recently, although it was a bit few tricky moments with this recent pullback that has happened in the beginning of the session, but later you could see that actually everything has returned back to its own. So this flat standing in the shape of some kind of the flag, some minor horizon consolidation, mostly stands in favor of the bears. Just because trend stands bearish, and with this drop and flat standing, this, as you can see, kind of the, well, it's not quite the reversal bar, but it's very close to it. So the market has created a new top and closed almost below the lows of the previous session. So this is bearish performance. And as I said yesterday, and I could say today, that this mostly stands in favor, at least by my view, of the further downward breakout. And I wouldn't be surprised if market will break simultaneously the 1950 support as well. It's gold oversold at 1922, so potentially we could get a bit stronger downside action. Maybe not right today, but overall performance for me looks more bearish rather than bullish. On the 4-hour time frame chart, you could see that we have the same triangle pattern. Recent performance to the upside actually showing what we have warned you about, is that be aware of the possible ABCD pattern completion here, and initially it would be better to place stop if you intend to take the short position inside of the triangle above this area. Once market starts dropping, you could move stops to the break-even. So here's, you could call it as a failure breakout of the triangle, which is also stands in favor of the bulls. Of the bears, of course. It's probably, if market has failed to pass through this area to the upside, it's should try to do it in opposite direction. So here we can't call about the butterfly pattern to the upside anymore, just because of this swing and because that swing is lower than this one. So and as well as actually to the downside, butterflies also can't be considered, because this top, as you can see, above this one, and this is not the left wing anymore as we have suggested. So here we have to follow some different logic. And one of them, as you can see, the XOP target that we have 1922. So one of the reasons why we suggest possibly another leg down, especially as market shows no reversal, it mostly stands flat. So with this ABCD pattern as well, we've got yesterday kind of the Gartner's tubular to sell pattern. So market's now going down. If you still consider taking the position, you haven't taken short position yesterday, you probably could watch for some pullback here on an hourly chart. So you can see swings are relatively wide here. It's still some time, probably a couple of weeks until the X date and the depth sale question. So volatility might be significant. Today we get inflation statistics, the consumption expenditures. So it's also might bring some volatility in the gold market, especially if it will be weaker. It probably could show some more or less significant pullback. Here we have the hidden divergence with the price, as you can see on the hourly chart, which also suggests maybe some upward action could happen. Because currently, guys, right at this point, 1959, well, it's a bit not very attractive to take the position as I described the situation yesterday. Maybe this level will be broken, but its existence with the direct close to current price level, it's just $10 per contract here. As you can see, market 1958, 59, it's 1949, it's 1950. So very small distance where you place your stop above this area, so your risk reward will be less than 1. This is not good. And from that standpoint, you have to either find some pattern to stick with. So for instance, if market will form here regardless to sell, in this case you could get the more or less acceptable position taking level and with a relatively tight stop. So that's probably what you could do in taking the short position if you would like to. because at this point it is, well, we have no acceptable area where you could hide your stop right now, and you have to wait for some better entry opportunities on the gold. For the bulls, personally, guys, I do not see good trading stop for taking the long position. So we don't have any bullish patterns, do not have the bullish performance. So personally, I do not see something attractive for taking the long position here. That's actually what we have currently on the gold market. If you have taken position yesterday, you probably could hold it, just move stop to the break even. Other traders, well, I suggest that it would be better to wait for the pullback. Of course, if you expect that market will break 1950 directly and keep going lower, you could consider other ways for a position taking. So that's what we have here.